So the Nifty has traded well above the 13,100 mark to touch yet another record high, while the Nifty Bank that has inched higher and crossed above the 30,000 mark and is now trading just about 8 to 9% away from its record high. And the broader markets also seem to be in fine fettle because the Nifty Midcap index has touched a level of over 2-year high, while the small cap index is also trading at a 52-week high. Now, all of this, the rally that we are referring to since the March low for the markets has been on the back of some strong liquidity that we've had from the foreign investors. Just to highlight how the flow picture has been, 2020 has been a strange year because in the same year we've had a record monthly inflow as well as a monthly outflow as well. Let me start off with this particular month and highlight how the two institutional investors have performed. If you have a look at the month of November, foreign institutional investors have bought more than $7 billion worth of Indian equities. That is the highest inflow number on a monthly basis, and we still have about 3 working days left for the month of November. For this quarter itself, they have already pumped in nearly $10 billion, and that's the highest quarterly inflow that we are seeing since March of 2013. In the last 1 year, the inflow has been in excess of $15 billion, and that's the highest yearly inflow that we are seeing since 2014. Now, the context of this $7 billion, how big is this? Like I was telling you, this is the highest monthly inflow, and by quite a big margin as well, because the previous 3 highest inflow numbers have been about $6 to $6.5 billion for a month. August 2020, $6.1 billion inflow. March 2019, we had $6.1 billion of FII flow. And September 2010, we had nearly $6.5 billion that came into Indian equities via the foreign investment route. That is the significance that I'm referring to. In the last couple of decades, this is only the 4th month where you have more than $6 billion come into Indian equities. So definitely the FIIs seem to be on a buying spree as far as Indian markets or emerging markets are to go by. Now, the opposite is exactly happening at the domestic institutional front, because we've had the DIs that had been on a record selling spree. If you total the November number, that stands at about nearly 38,000 crore rupees that they have sold in the month of November. Now, that is the highest outflow that we have seen on a monthly basis ever by the domestic institutions. Of course, this is on the back of the highest inflow that we got in the month of March, where we had the domestic institutions pump in more than 55,000 crores during the month itself. Just to give you a sense of how the recent trend has been, well, in this year itself, November month has been the 4th month wherein the DIs have sold more than 10,000 crores worth of Indian equities. Of course, all of this is, as we have been tracking the mutual fund numbers, we know that it is on the back of some redemption pressure, because of which the domestic institutions have been net sellers of Indian equities. However, the matter of fact is that the market is at a record high and FIIs continue to buy Indian equities.